Well, if you find yourself on the streets of any city in the world, you will most certainly see a food delivery rider whizzing past you. And if you find yourself in London, Abu Dhabi or Hong Kong, you can be sure to see a Deliveroo rider racing to fulfill a mission. The mission to satisfy consumer cravings within 30 minutes, be it breakfast or lunch, as the hyperlocal delivery company rides to take a big bite of the global online food delivery market, which is estimated to double in size to $1.4 trillion by 2027. Speeding with the pandemic thrust, in the last quarter of 2022 alone, Deliveroo made 75 million food and grocery deliveries across 10 countries. But the uncertainty about growth of online food delivery, post the pandemic growth and many macro headwinds arriving all at once, have forced Deliveroo to take a hard look at its cost base, much like most other delivery platforms. As they now race to deliver profits, cut to 2023, stringent cost controls, exit from lackluster markets and even job cuts in the push for stronger unit economics have helped Deliveroo achieve break-even, taking it a step closer to profitability ahead of its earlier guidance. Well, joining me now on the show to talk about the food delivery market and their plans for India is the co-founder and CEO of Deliveroo, Will Shrew. He's on his maiden visit to Deliveroo's India Development Centre, for which the company does have big plans. Will, many thanks for joining us here on Young Turks on CNBC-TV18. Your first visit to India, and I want to understand from you why Deliveroo isn't in India. Does it not seem like an exciting enough market for you, or do you believe that it's already got two large incumbent players and hence no space for a third?
I think it's an amazing market, and I wish when I started this business 10 years ago that, I could have gotten into India early, but, that didn't happen, and you've got two big players, two players I respect hugely, and, we're focused on building our India Development Center here, but not focused on actually launching the business here.
Yes, so no Deliveroo in India, but you did talk about your development center, which I understand is your largest facility, your largest development center outside of the headquarters in London. Will, take me through what the plan is as far as the development center here in India is concerned.
Well, we kicked off about a year ago. So we hired our first people here in Feb 22. The team here and the team in London have done an incredible job growing the team now to about 125 engineers and developers, and we'll be looking to increase that over the course of 23 as well. The talent that we've come across here is really tremendous, and we're also working with people that have helped build these centers before in the past. So really, really excited about it.
Well, speaking of the excitement, let's also talk about the food delivery market in general. And I want to understand from you what the big challenges are as you see the market and the landscape today. You've got inflation, which is biting into the spending power of consumers. You've got high interest rates, which is impacting businesses across the world at this point in time. And companies like yours are now being forced to focus on profitability and look at free cash flow in a manner that was never done previously. And that's forcing many founders like you to review, reassess, reevaluate and change plans. Will, how hard have the last few months been?
I think it's, I've been doing this 10 years, and, you're always going to have different ups and downs in the business. But I think what's been happening over the last few years in terms of this, COVID bump for a lot of tech companies, then following that sort of, maybe the growth coming from COVID tailwinds not persisting as long as we would have thought. You then toss in, a very high inflation environment in the UK and Europe, and obviously interest rates rising and investors wanting to see profitability sooner than they did in the past. All of this kind of coming together has meant that we've been hyper-focused on financial discipline, making sure that we're being as efficient as possible, not just for, currently, but going forward. And I do think it's the right thing to do for the company, for the industry. And it's not just the delivery industry. I think it's it's most tech companies, right? And so we view this as an opportunity to really rethink the way we're doing things, to get leaner, and to generate cash faster than we would have thought maybe a few years ago. And we view that as an opportunity.
Yeah, you speak about viewing this as an opportunity, and that very often is what happens during adversity. You are pushed against the wall and you have no choice but to reimagine workflow and business plans. But Will, you said that this is the right thing to do. But as this rebalancing and this correction takes place, what do you believe is how much more pain are we likely to see for this ecosystem globally as well as here in India? And I know that many founders here in India are grappling with exactly the same issues and the same challenges. But what kind of pain do you anticipate, and how long do you believe this correction is going to last as this rebalancing takes place?
I mean, I think there's we're talking about two different things at once, right? I think the first one is purely a macroeconomic condition, right? And so do I think that inflation is going to last as will it persist as at high a rate as it has been for, post the next 12 months? Hard for me to say, but I'm willing to take a guess that it probably, comes down at some point, right? And obviously, it's not like every market in the world is affected the same way, but certainly in the UK and Europe, we've seen it most pronounced. Then I think there's the second question, and in a way they're sort of related, but in a way they're not, which is, the focus on profitability versus something like growth. And I think what persisted in a ultra long, low interest rate environment, that probably won't come back for some time. I don't think that switch flips back. I think that investor focus will be on free cash flow generation, will be on efficiency. All of the stuff that, frankly, people have been focused on since the formation of capitalism, right? And so I think that has come back, and that will persist in my view. But those two things are a bit different in my mind.
Yes, linked but different. But Will, what is that going to mean as far as individual businesses are concerned? And let's focus on your plans, for instance. I would imagine that expansion will be put on hold. You're looking at exiting markets. You've already exited two in 2022. Are you likely to take a hard call on markets that are not delivering for you at this point in time?
Well, we made that hard decision to exit two markets last year. And that was really tough because we'd been in there for some time. But at the same time, we also entered a market, right? We entered Qatar. We have a really great business in the Gulf states. We launched the UAE a while back, and Kuwait a couple of years ago. We've had a lot of success there. And on the back of that, the team launched Qatar. We are going to invest in the business because this, at the end of the day, is a growth industry. It's still a nascent industry. Penetration rates are still low. And so if we are presented with opportunities to invest, we will. It's just the bar for those is much higher than it was in the past. And a lot of our focus will be, how can we be doing the things that we're doing day to day today even better in the future, right? So I think the investment opportunities will be there, but like I said, the bar just has to be higher.
Yeah, speaking of investment opportunities and the focus on efficiency, and one is, of course, addressing the cost side, so taking out any bloat across the system at this point in time. And I know that is what all founders today are focused on. But what about diversification of revenue streams, Will? And largely at this point in time, as far as the food delivery business is concerned, it's restaurant commissions, it's customer delivery charges, it's the tips over and above what you already charge your customers. Then, of course, there is the ad space. What do you believe could be added to the mix in terms of possible revenue streams for the food delivery business?
Yeah, I would say that every single year we come up with new large, revenue stream ideas that we're testing out. So I'd say the big one over the last few years has been grocery, right? Grocery is a huge part of our business now, much more than I thought it would be at the beginning of COVID. And we're doing grocery deliveries in kind of anywhere from 15 to 30 minutes, working with an assortment of brands you already know, but also building our own dark stores in conjunction with those brands, right? So that's been a huge area of growth for us. I think you mentioned the ads business. We launched our ads business last year for restaurants, and late in the year, we launched an ad platform for FMCG companies as well. So, the likes of, Unilever, companies like that. And we've also launched a number of non-food delivery partnerships as well. got a big partnership with Boots in the UK. And so I think that, your question's a really good one. But, I think every year we've shown that, we've come out with new initiatives that are adding to the top line. And like I said, the bar is ultimately even higher now than it was in the past for adding new things to what we do.
While I hear you, Will, I look at what's happening here in India with the two large incumbents in this space, and they're going down exactly the same road, grocery deliveries, and of course now quick commerce, 10-minute deliveries. What do you make of the 10-minute delivery model?
I think it can work in areas where there's high population density and where we have strong market share. I think in areas like that, you can push enough density to make money within the four walls of the dark store. It's not an easy business at all. I view it as a pretty critical part of the consumer value proposition, though, and we have made it work profitably within the four walls. I also think it's a very different time than it was, let's say, 2 years ago, 18 months ago, when dark store players were raising capital at really, really high valuations, huge amounts of capital very quickly. That has changed pretty dramatically. And so, we've been able to do the things that we want in that space without, people, acting, I would say, as I don't want to say irrational, because maybe what worked back then was rational, but people have been much less aggressive, I would say, in this space as capital has dried up. And our belief is that this dark store model works on a platform where you already have the lowest cost deliveries and you already have the customers at the same time.
So do you believe then, especially if you do have high penetration and high density and enough dark stores, do you believe that then this 10-minute quick commerce model is viable in the long term? Is it sustainable in the long term?
I think it's viable in certain neighborhoods and areas. I don't think it's viable in every single neighborhood around the world. I don't see a situation where this supplants, our normal grocery delivery where we already work with existing stores, right? I think it's a complement, and in areas where we think the unit economics work, we're definitely investing in it, and that's what we've done. But I don't view this as necessarily you have a dark store in every corner of the world.
Right. Will, one of the challenges that I know the Indian players have faced, and I wanted to understand your take on this, is the partnership with restaurants. At the end of the day, it has to be a partnership, but restaurants often feel that the delivery aggregators are not doing enough to make this a mutually beneficial relationship. And I know that the Indian incumbents are faced with that. I wanted to understand your perspective on dealing with this and how you've gone about it in the last decade.
I mean, it just has to be a partnership at the end of the day, right? I think what we bring to merchants, and it's not just restaurants, but grocers as well as non-food merchants, is incremental sales. And I think one of the criticisms of the space is that we charge what seems on paper to be potentially a hefty commission. But I think the difference between our business and a traditional marketplace is we are actually fulfilling the delivery, right? We are paying the delivery riders, and they need to make a good living as well. And so sort of sitting down with restaurants, explaining the incremental impact of the business, explaining how much we're investing, not just in the delivery side, but the payment side, the fraud side, the packaging side, the customer care side, all of these things that may not be obvious on any given order, but are critical. And obviously all the software behind handling all of those things and balancing the three sides of the marketplace. So all of that stuff is really, really important. And then we do other stuff for restaurants, right? We work with them in dark kitchens, right? We have a white label delivery service for them as well. So you can order through their own app or their own website as well. And we obviously collaborate a lot on marketing. But you have to balance all three sides, and sometimes it takes a little bit of education. But at the end of the day, you're absolutely right. It has to be partnership.
Well, time for us to take a break, but when we return, we continue our conversation with Will Shu, the founder of global food tech delivery company Deliveroo. Welcome back. You're watching Young Turks, and we're in conversation with the founder of global food tech delivery company Deliveroo. In a challenging environment where the macros are looking increasingly challenging, and as far as companies like yours are concerned, costs have to be kept an eye on. Margins are already fairly thin. How do you make the delivery aspect, the delivery side of this model actually work? And what do you anticipate as being the big changes that will need to happen in this gig space?
Well, I think the numbers speak for themselves, right? If you look at the UK, let's just take the UK, where since the end of lockdown, I would say, employment has been the tightest it's ever been. So the employment market's been the tightest it's ever been. Our retention rates are at an all-time high. Our application rates are at an all-time high. In fact, we've capped the number of people we put on the platform because we want to preserve earnings, right? And so if you just look at it from that standpoint, in the tightest labor market, our riders could go get an employed job at a supermarket, in a warehouse, at a restaurant. They could do all those things. They choose not to. They choose to work with us. Why? Well, one, obviously, it's earnings. That's fine. But secondly, this job, where I don't know exactly how it works in India, by the way, but certainly in our markets, you log in and out whenever you want. You accept an order, you reject an order. You can work with Amazon, you can work with someone else, and you are completely free to set up your day the way you wish. And that has immense appeal, and we're very proud of delivering that flexibility. And at the same time, we recognize that benefits are necessary and security is necessary, which is why we've entered into, for instance, a voluntary partnership with the GMB. This is the third largest labor union in the UK. To allow our riders a voice with unions at the table for any issues that come up as well, right? And so we always think about these things as we've developed something that we're very proud of, but it can always get better. We were the first online platform to offer free insurance to our riders in the event of a variety of different things, right? And so this is something where it's a competitive market for riders, just like it is for consumers, just like it is for merchants. And how are we going to drive a proposition that works for them?
Mm-hmm. Speaking of the environment and speaking of the similarities between what we've seen you experience and what we've seen food tech companies here in India experience, even when it comes to the IPO, Will, I'm sure that is something that you would like to forget. And I'm sure that post-IPO, the period that we've seen here in India for many of these companies is a period that they would like to forget and move on. But what has been the big lesson? What's been the big learning from that debacle of the IPO, and then how life changed for you from then on?
I don't know if I go that dramatic, actually. The way I think about it is the IPO is a financing event. It allowed us to raise a significant amount of capital, which has put us in a great position for today. And it was over 2 years ago, right? And I think a company is not going to be measured on what its first day IPO price performance is. I think a company is measured on a lot of other factors in addition to that. And so, I think our focus has been, as I said, building a great consumer value proposition, driving towards profitability, driving more growth into the business. And that's what we're focused on. I'm not sure exactly what the question is around the IPO, other than to me, it's a financing event. It was 2 years ago. And yes, it was a tough day, no question about it. But it was a long time ago, and I'm not the world's. It's not like something I sit around thinking about every single day.
No, the reason I asked you that question is because what we are seeing here in India is that there has been a sort of erosion of confidence with respect to new tech companies post them IPOing and post the very sort of lukewarm reaction post IPO in the markets. I was trying to understand from you how you've gone about pitching the narrative to investors and what the learning therein has been for you as a company post the IPO. I understand it's a financing event, but it's also much more than that because it is a measure of confidence as well of the public markets.
Yeah, I think it is, but I think, kind of how a company does on its IPO date is literally one day in what hopefully is a very long corporate history. And ultimately, if you feel, if it was a decent financing event, then that's also a good thing. I think there's no question at all that tech valuations have suffered greatly, and that's not an Indian phenomenon. That's not a British phenomenon. That's in America. That's in Asia. That's in every single place. And really, what this is this interest rates have gone up. Investors have looked for safer assets, right? We've seen this. I'm 43 years old. I've seen it happen in 2000. I've seen it happen in 2008. And well, 2008 was a bit different, but same sort of kind of situation where there was a lack of confidence in certain things. And I think this is no different. And our job as founders and CEOs is not to obsess about the market day to day, but to focus on our business, to drive to more profitability, to make sure we're driving growth verticals, and to explain that to investors. And I think for the investors who have a longer term point of view, hopefully they view it as a good buying opportunity.
Yeah, and I think you're right that you cannot obsess about what the markets are doing as far as the stock is concerned. You need to obsess about building a sustainable business. And Will, I want to talk to you about that. As a founder, I know you've done a little bit of everything, including deliveries. Do you still do that sometime today?
Yeah, I do it about once a month in my neighborhood. I live in a neighborhood called Notting Hill in London. So that's where I do it. And then when I visit markets, I do it. So I was in Hong Kong a couple of months ago. I did a few deliveries near our office. I did some in Dubai. I was just there a couple of weeks ago as well. And so it's an opportunity to do primary research.
Will, it's been an absolute pleasure. Many thanks for stopping by and speaking with us here on Young Turks. We wish you and Deliveroo the very best of luck with your development center and your plans here in India, as well as your global plans. Thanks so much for speaking with us today.
Thank you, and sorry for the technical difficulties earlier. Hopefully that will be sorted out. Thank you.
No worries at all, Will. Thanks very much indeed. We will take a break here on Young Turks. There's a lot more coming up. Don't go anywhere. We're back in a minute with more.